This video covers NFRA Order No. 24/2024 concerning Ushdev International Limited, or UIL. The core lesson is that a disclaimer of opinion is not a shield against negligence, a crucial point for all audit professionals. Our agenda outlines the key failures in this case, including fraud reporting, reliance on management experts, documentation, and compliance issues. Finally, we'll look at the NFRA verdict and our firm's action plan. UIL was already in a financial crisis with loans of 2,630 crore rupees classified as NPA and under insolvency. The auditor, C.A. Chirag Doshi, issued a disclaimer of opinion on the financial statements and internal controls. Failure 1 involved ignoring fraud indicators under SA 240. The expected credit loss increased by 2,583% in 1 year. Alarmingly, UIL made fresh sales of 53 crore rupees to long-term defaulters. The NFRA ruled that the disclaimer did not excuse the auditor from questioning these suspicious transactions. Failure 2 was the blind reliance on management experts regarding investments in subsidiaries. The valuer explicitly stated they did not verify the data, yet the engagement partner accepted the report without performing impairment checks, failing to challenge the expert's disclaimer. Failure 3 concerned documentation under SA 230, revealing a, quote, mystery preparer. Work papers lacked authentication by preparers, review signatures were undated, and some papers were prepared by a person not on the engagement team, which questioned the integrity of the audit file. Failure 4 was the non-disclosure of pledged assets, violating IND AS 16. Despite evidence in the audit file that property, plant, and equipment were mortgaged, this restriction was omitted from the financial statements. Disclaiming borrowings does not negate the specific disclosure requirement for PPE. Failure 5 was the lazy ICOFR disclaimer. The auditor based the control opinion disclaimer solely on the post-year-end NCLT insolvency order. NFRA found this basis deficient, emphasizing that the auditor must document control failures during the actual financial year. The NFRA verdict penalized the engagement partner with a 500,000 rupees fine. The key finding: a disclaimer of opinion cannot absolve an auditor of other statutory responsibilities, such as independent fraud reporting under Section 143(12) and mandatory documentation under SA 230. Our key learnings include understanding that a disclaimer is not a shortcut. It does not replace the need to evaluate fraud and compliance. We must scrutinize expert reports and ensure strict file hygiene, with every work paper properly authenticated and reviewed. Our action plan focuses on immediate review of valuation reports for disclaimer clauses. We will update fraud reporting checklists, audit file access controls, and provide training on auditing companies under insolvency. Thank you for watching this video. The source for this case study is NFRA Order No. 24/2024. Please refer to your internal materials for contact information and a link to the full PDF.